The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 27th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. I know I can remember that number. That's the way you would contact us. Of course, you can email me, steve@tfn.com. Remember, sometimes these emails get delayed, though. Oftentimes, they get a handful after the show, just ISP issues or something along those lines. Of course, inside the Tiger's Den, a ping will do, even a golf club ping, if that's what you want to do. How about that great commercial out there with what's his name, the cheesehead, when he tries to get rid of the fly off of the that's a great commercial. There's a couple other great commercials that are out there. In any event, let's go ahead and get this show started. Of course, this is Terrific Thursday and none other than Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up a whopping, I do mean whopping, 8 points, trading on 18,207. S&P is down a whopping, yes, and I do mean whopping, 1 point. Now, NASDAQ Composite Russell 2000, really Russell 2000, a totally different story. That's trading down 10 points at 1194. NASDAQ Composite, not really a big move, 21 points to the downside, 52.29. The DAX closed up 7 points. The FTSE up 28. Gold's up 220. Silver is flat. Light sweet crude is up 76 cents, trying to stage a bit of a rebound out here. Leading the charge here to the upside, Alexion Pharmaceuticals is up $11. F5 Networks is up 11. That's 9% on both of those to the upside. IPG Photonics up 10%, nearly $9. ServiceNow, and I do mean ServiceNow, is up 11% or $8. Buffalo Wild Wings up $8.55. Celgene up $6. To the downside, some whoppers. You've got CoStar Group down $22, 10.6%. AutoZone, not in the zone today, down $21, about 3%, shy of 3%. O'Reilly Automotive down 7%, though. That's $20 to the downside. Allegiant Travel, traveling south, down $18, nearly 12%. Simpress NV, that's down 17%. There are some big Lending Tree, down 16%. ABIO Med, I don't know if that's how you pronounce it, but that's how I would pronounce it. That's how I did pronounce it, down 13%. InterDigital, down 14%. So we've got some whoppers to the downside. We'll probably take a look at those because with a flat market, and you know how I like to give you at least one or two nuggets, not referring to the NUGT, but one or two nuggets for us to pay attention to today. And as I scan right now the intraday charts out here, meaning 30, meaning 120, meaning 300, even 10-minute charts, I'm not coming up with a gosh darn thing to say, hey, this is what you should do. This is where you should hang your hat. Price moving higher or lower, doing less relative energy weakness out here. It's just not present for me to share that with you. So that's a bummer because that usually occupies, this first 4-minute session out here. So I don't know what we're going to do. I know I'm going to wait for your calls. No. Well, I am going to wait for your call. That's for sure. But the only nugget out here that I can take a look at, now the market is hardly down at all, with the exception of the Russell. So we'll take a look at that. But the nugget out here, what is interesting is the S&P relatively flat. We're not seeing that message carried through in the volatility index. It's above 1412. 1412 being the 50-day exponential moving average. Typically, when the VIX index gets above that level, you really start to see some major price erosion. So, is that just going to play a catch-up game? Who is out of style here? Is the volatility index or is it the market? I'm going to go with the market is the one that is out of step. Nonetheless, if you're trading the volatility index, I would say today, watch the VIX index. That's going to hit the 1563. Now, some of you that trade, UVXY and those other ETNs or if there are a couple ETFs out there, what you really need to be tracking is the futures contract, not the cash VIX index, which are two different things out here, and so you need to take a look at, looks like it would be the October and likely the December contracts that make up, what's going on inside of UVXY out there. In any event, that's a 300% ETF, is it not? It's only up 2.7% today, so not. I think it's a 300% ETN out there. I could even be wrong about that. In any event, so what's the number to look at if we go back to it? It's going to be that 50-day X, but it's really going to be, I'll say 1412 to 1421 would be the number. You get a close back below that. Okay, then liquidity. Otherwise, this says that the market wants to move lower. Now, that's going to be interesting. Not that these two stocks are going to control the market, but after the bell, you've got two big movers and shakers, right? We've got Google and we have Amazon. We would call those two big movers and shakers. So we should take a look at those charts, see what their messages may be, see if we can get a glimpse as to what the market at least believes, how it's going to respond to their earnings call out here. All right, so we'll do that. But first, let's go take a look at the IWM. Since that is trading down $1.03, about 15 million shares behind the move, it is below swing points. Let's go see where this thing is moving into. And voila, so we can see it's below market profiles. Not a good idea to trade below market profiles. That was a level of support that held yesterday. That's the weekly bottom of the box, 119.58. So you're below that. So with regard to this style of horizontal information, guess what? There's none left. It's gone. I mean, we go to intraday time periods and so forth, but none left out there. So now we got to just turn those off because they don't have any meaning to us at the moment. Could by the end of the day, but it doesn't have any meaning to us at the moment. Let's turn those off. Now let's go figure out, okay, so what is it doing? So we would take a look at breakout areas. Now, breakout areas are going to be areas of wide price spread, accelerated volume. Typically, you like to see both out here. Where are breakout areas? Well, that's what gaps are. Gaps are breakout areas. So when people say gaps get filled, it's another way of saying price comes back to the breakout area. So if we take a look at different breakout areas where there's gaps out here, there's one that was formed on July the 12th. Now, that gap was formed with 44 million shares. You're pulling back into that sign of strength, if you will. It's a breakout area, that gap. That's how we're going to take a look at a breakout or a breakdown. And today with 14.6 million shares. Yesterday's volume inside of the IWM was 24 million shares. I don't have the math exactly. I don't have it calculated at all. That doesn't mean that I can't or that I won't. I will. I just have to get down to this portion of my spreadsheet. And let's go see what the straight line number is. 14.6. We've been trading for what? 3.5 hours out here, right? Actually, we'll just put 3.5. It says 27 million shares. Yesterday was 24 million shares. It's going into 44 million shares. Still a light volume pullback out here. Nonetheless, the IWM could be heading lower. It could be an A to B equals CD to the downside. Let's go check that out when we get back from this break. By the way, it's 116.84 would be level number one. Be right back, folks.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is up 12. S&P is totally flat. Let's go to one of our gold miners, a real gold nugget, and that is Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you doing this afternoon?
Pretty good, Steve. I see that a lot of the gold mining stocks, the GDX and Nugget, have been pulling back. And do you think it's a good time to get back in?
Well, so the GDX is pulling back. 28 million shares right now. 44 cents is what it's down. Not all the mining stocks. You've got ABX, which is one of the top 5 inside the GDX. That's trading up. And Agnico Eagle, one of the other stronger stocks, trading up just slightly, both up 29 and 39 cents respectively. Specifically, you're looking at NUGT, right? But you would make that decision based on what the GDX is doing. Kind of help me out here.
Yes. In fact, what I've been doing is I've been trading Nugget and GDX, and I got out of a lot of them the other day. And some of it I'm still kind of holding in the GDX, and I was thinking about getting back in. So,
okay.
Yes, you can focus on the GDX.
Okay. We'll help 3 of our other listeners that have sent emails, so that's a good thing. With regard to GDX specifically, is today a good day to get in? It's as good as any. If we just take a look at our TAS market profiles, what we can see is that this is traded back to the point of control level, which is 23.51. That's a potential buy area, as well as the price level of about 23.05 to 23.12. So, that would be the price range that you would be looking for. Today's volume, let's go take a look at that. 28 million shares to the downside. Going against 78-ish type million to the upside, 80 million to the upside. So certainly this is pulling back on light volume. The question becomes, where is it that you want to go ahead and, poke your head here? What you don't want to see, and your stop, you would want to have your stop on the other side of the low of October 11th. That would be one potential stop. That's at the price point of 22.50. Now, the reason, but ask me a question if you have one in your mind.
Well, I would like to see possibly like a. It's hard for me because I'm doing this at work. I work a full-time job and I get to check everything during my breaks. But a lot of times what I'll do is on my break I'll go ahead and I'll pop up, let's say like the GDX, and I have access to a 30-minute chart, and I'm would like to see a bullish candlestick, and that would be more of a confirmation that would be the time. But sometimes it's hard, it's hard because working full-time. So sometimes also what I'll do is I'll put a buy order in at a good area of support and, see if it hits while I'm working and then check it.
No,
then,
absolutely.
Yeah.
Absolutely. That's the way to look at it. Now, with regard to the GDX, the bullish candle that formed out here that you were looking for actually took place at 12 noon. So that was a bull sash candle. Here, let me put this on the screen so that other people can see, too. No reason to keep that private. So price was moving lower, doing it with less relative energy. That the move down here to 11 and 11:30 actually had a bit of energy. So that pattern didn't form out here. With regard to any other pattern, let me just do a wave count on the way down, see where we're at out here. That's the wrong way. I need to go to the downside, not the upside. Just so happens on your 30-minute chart that on the same session, the session prior to your bull sash was a seventh wave move, wave number G out there. So I think, Mike, that all the things that you would be looking for, and folks, this was not pre-planned or anything. It's just Mike saying, hey, I like to look at the 30-minute chart, and he looks for certain patterns out here, and we just pull up the 30-minute chart, and it has those patterns that each of us would like to trade out here. So you've got that. The other thing that you've got that I'll share with you is right now, and this is a chart for gold. We're looking at a line chart. That means we're looking at closes out here. And gold has been very sneaky. I noticed this late last night. And gold has been very sneaky. Doesn't want anybody to know that it's actually making higher lows and higher highs on a closing basis. You see, if I would go ahead and do this here and put it to our normal candle view, it's disguised. And I'll show you what I mean out here. It's a little bit disguised. You can still see, rising prices, but I just like to take a look at the closing price, and it's doing all of this, Mike, in the face of this guy being the king, not Arnie Palmer, but U.S. dollar index. So the U.S. dollar index, which has been moving, has done absolutely nada to both gold and silver. Doesn't mean that it won't. I'm going to take the stance that it won't. It's not. So I'm not going to fear the king out here. And, of course, I would ask you not to fear it as well. Just make sure you have a stop in place. So
right.
The 30 – go ahead.
Yeah, I'd like to bring up something else, too, that I was kind of aware of. Andy Heck brought up the other day, I think last Thursday. He was pretty much saying with the dollar going up the way it has been, and he thought that if gold didn't get smoked bad Friday, that might be a good indication that, hey, gold is really holding its price, and it's in a sense showing relative strength against something that would normally make it tank.
I'm not going to argue with Andy Heck out there, the commodity king. So I agree, by the way. I think that is really what the charts are communicating to you and I. As both you and I know, anything can happen out here. But,
right.
Hey, with regard to a 30-minute chart, you couldn't get a better trade setup. And actually now your stop, in essence, would be at somewhere just below today's low. Because you get below that seventh wave, it suggests that it might pull back further. But I do think the numbers that I gave you on the GDX with regard to their daily support levels, those market profiles, those are the ones to be looking at. So don't go all in hog heaven. This certainly can pull back into that 2305 and 2312 level. And if it's on light volume and gold and silver are still in this small uptrend, that's your real buy area. Okay?
Thank you very much, Steve.
Hey, thank you for calling. Thanks for pointing out the 30-minute chart. I'm sure that our listeners are jumping all over that. All right, Mike?
Okay, great. And, like I said, it's just something that I've been doing because, again, I work a full-time job and I only get a couple times a day to check everything. So I kind of developed my own little system of, like I explained, like sometimes I'll put a buy order at support and, if
Sure.
I can't watch and everything, and then look for what's happening on the 30-minute because it just gives me a closer, time frame. So.
No, absolutely. Now, the one thing, what you're looking for, the other side of the trade. Here, I'll give you the so-called bearish side of the trade, because if we change the way that we look at things, and the things that we look at will change. Think about that for a minute, folks. But the level of resistance out here is this 1278.50 area. So from the bullish side, for the mining equities, we certainly want to see that area get taken out, and then 1289, and then it should be off to the races. So I think there are subtle hints that suggest that is what gold wants to do. Andy gave you one, and gold has given us another. All right, take care, Mike, and have a great day at work.
Okay, thanks, Steve. Bye.
All right. Folks, that was Mike in Ormond Beach. Call lines are open. Dow's up 5, S&P back 1. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 7, S&P is down a point, so we haven't really moved much out here. And we did cover, I did see we had like 4 emails of folks wanting some version of either the miners, all of them. So I think that Mike and I covered that, so we're good there. We've got that clear. But as I say, the phone lines are open, the email lines are open, all the lines are open out there. We did get some requests inside the Tiger's Den, so let's go to those. The first question was about, let me see, Danny. Steve has the gold-yen correlation broke. Where's the yen going? And the answer is it does look like it has broke, Danny. Let's put this up here. And what Danny's referring to, we'll take a look at this chart. The top portion of the chart happens to be the Japanese yen futures. Center portion is Goldilocks. The bottom portion is the 30-year Treasury. Continuous contracts on all of these. That way we've got all kinds of data to go ahead and take a look at. And for the longest period of time, if you take a look at the Japanese yen, if you ask who's ruling the world, we believe that it's currency, not Japan necessarily, but it is currency. And you can see how all of these markets were, for the most part, synergistic, and they were all moving in the same direction. Now what we can see here, Japanese yen is clearly heading lower. We'll go try to answer that question, where is it headed to? We won't off of this chart here, Danny, but with regard to the correlation, and that's part about the also maybe the strength in the U.S. dollar, or let's say the weakness here inside the Japanese yen, the futures contract. The yen correlation with regard to bonds still is in full force. No question about that. But with regard to gold, yeah, I think it has broken for the time being. But it's not one that I'm focused on and saying, I would rather just trade the patterns, just like Mike was doing. I would rather just trade the patterns, focus in on those. If they don't win, if it doesn't turn out to be a winning trade, it doesn't turn out to be a winning trade. But we just trade those patterns when they show up on our screen out here. Now, if we just simply go to the currency out here against the U.S. dollar, it's okay, Danny, if we do that and we take a look at where this is headed to, so we can see the weakness out here. You're going to see it reverse the other way. But if we try to figure out where this is headed to, it's above all profile. So this says further weakness, or that the yen in this chart here is going to continue moving to the upside. Now we try to come up with prices out here. There's really no clear A, B equals CD, Danny. Nothing that's really clear. Hard for me to really even say that there was I could say there's a consolidation. You don't have to twist my arm a whole lot to do that. And let's turn off these profiles, because here would be the consolidating pattern. Now, folks, one of the reasons that we want to be able to identify this consolidation pattern, and we can see where we have, what would be referred to as a double bottom, right? And then maybe a double top out here. And yesterday and today are really breakouts of that level. So it was a double bottom. Wasn't a double top. It was a double bottom, because we've now broken out the swing points up at the highs. We've done that today. So what that does is that would give us our price projection, and it's equal to or greater than the consolidation. It would be good if I drew it exactly the same distance, just to give you a better price range. But in essence, the estimated level of where the yen should trade to, let's go ahead and make this a yellow horizontal line. It's going to be right in the area, the vicinity of 108.21 or so. Now, that would then say that because the correlation with regard to the 30-year Treasury, which nobody asked about, should continue, and the 30-year Treasury should move to the downside. If we take a look at it, it's right now trading out at 162.04. It is now traded down below, and subscribers, Mastering Probability, knew yesterday that Treasuries were headed down to the bottom of its descending price channel, which it has hit. Now, I don't know, because moving through that doesn't really mean a whole lot. It could be an area where price would be contained, but moving down below it, doesn't break this pattern, just means the bottom area of the descending price channel, either needs to be redrawn or redecorated and repopulated, which is really more likely what it would need to do. If we take a look at it, all we're going to do here is add, is it that line? Yeah, that would be the next channel line that would be out there. So, is the 30-year Treasury up against support? Well, if it is, the Japanese yen should be up against resistance. And folks, I didn't see the resistance that was out there. Now, maybe it is. Maybe what I can do on a different chart, which I can do on a different chart out here, is let me put the futures contract back up. Give me a moment to do that. Let's see if we've got any wave counts or anything out here that we would pay it to, just something that would give us some type of bottoming effect. And no, we're in wave number 5 to the downside out here. So it does look like, Danny, the Japanese yen continues to head to to get weaker. Is that your call too, by the way? Danny's always looking at that currency pair, so we should really ask his advice and see if he seconds the motion out there. Okay. Now, we also had a request to go take a look at Google. Let me see. Where is the request? Steve. I see an AB equals CD up potential on both the NQ and Google, but I'm not sure that it could be. So let's go. So that's Maria in New York. She's asking about that. And so let's go take a look at Google for her, see if we can identify the A to B equals CD pattern inside of Google. So let's take this out here. Let's break this up. So here would be, this is the pattern. Now, I don't know, Maria, if this is the one that you have drawn, but this is the one that I would draw. So let's do this. Let's step back just for a moment in time. And let's take a look at the small A to B equals CD to the upside. Danny did second that motion, folks. So if you are a trader of the currency pair, that motion is seconded with regard to where the Japanese yen is headed to. It's always nice to have a second out there with regard to what, because you guys are my eyes as well. Now, Maria, if we take a look at Google, I'm showing you the small A to B equals CD. Let's get the volume out here as well. Good to have the volume characteristic. Is it mandatory? No, but it is helpful to take a look at that. The B point of this A to B equals CD was September 22nd at 1.4 million shares, was passed with 2 million shares, right? So that gave us the small A to B equals CD. Now, this thing made the one-to-one, gave you a bearish reversal signal, did that right here on this trading day. Should have been it. But it wasn't it, because 2 days later it went to the next level. And as it got to that next level out there, it was that very next trading day that gave you a little dark cloud cover candle. Now, this is interesting with regard to Google, because it actually has given us 2 topping patterns with regard to its A to B equals, well, with its A to B equals CD. Is the second one going to fail like the first one did? I don't know. Here is a slight nuance or difference. Actually, same pattern that's out here. You can see that price is moving higher, doing less relative energy out here. So we've got 2 patterns coming together that suggest that Google has topped. Now, what's the difference? I'm going to ask this question. If you're watching us on Tiger TV, just answer it by yourself, or actually say it into your microphone so that I can hear you. Let me point. Let me do this. I'll do the arrow. What's the difference between this topping pattern right here? Here's the day, by the way, that little bearish engulfing candle. What's the difference between that pattern and this one that we are in right now? What is the difference? I'll give you a little hint. It's not the red arrows that I just drew, but it is red. It could be Stevie's red line. This one suggests that the move higher is over. This is Steve Rhodes with TFNN. Let's continue looking at Google when we get back from this break.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. I don't know if this has happened to you. It's happened to me. Both campaigns have gotten my email addresses. And one's a private email address, and the other is the public one that I give to you. And I get at least 1,000 trash emails a day. And I'm not embellishing. I'm not exaggerating. It's probably more than that. It's disgusting. And sometimes I miss on real emails that I'd like to see, some coming from you. So if you've ever sent me an email and I haven't responded or addressed, or you're come back to look at your symbol or something like that, I apologize, because but both of them, they've really ratcheted up. I've noticed it over the last 24 hours out here. What a bummer. But back to Google. So the difference with regard to the A to B equals CD pattern, it's a bearish reversal signal, it's price RSI pattern. The first one is that the first pullback in price never made it down beyond the bottom, never closed below that oscillator unchanged line. And as long as price is above that level, since that price oscillator, that's a panel down below, is still rising, and it may just be a simple retracement. A little different now, and yes, a couple of our dentors pointed out the 3 black crows that are in place today out here. Oftentimes a bearish message out here. But we are right now trading below that. So, is the chart going to be correct? It has given us a couple of topping signals for sure out here, and that is on Google. If we look at the larger A to B equals CD, and Maria, I don't know if this is what you were looking at, where the A point is all the way down here on June 27 at the low, and the B point is out here, that little doji candle on August the 11th, which has volume of only 975,000 shares, and that was passed with 2 million shares. That is another possibility. We cannot rule that out. So there's an A to B equals CD within, right? There's a larger one out here, and this is still in play. It looks like this. And with regard to this one, and it's confirmed too, by the way, that gives you a price projection of 880. So here is the deal. What I can give you, if you're not in a trade, you wouldn't get into a trade right now before earnings. I would not recommend that. But I can give you the areas that you can look at where Google should trade to. If the market dislikes whatever Google comes out with, price should move down, just like Apple did, in essence, in this case here, down to the bottom of its weekly task market profile, 749.14. And likewise, if the market likes what it hears and sees, then price ought to move up to about the 880 level. That's the 1-to-1 A to B equals CD. It can move beyond that, but that would be the levels to be taken a look at inside of Google out here. If I look at this on a weekly basis, which is this doesn't float my skirt, or whatever the expression is. On February 1st, there was volume there. Let's get this right now. The volume on that session was 27 million shares. And last week, you moved above it with 7.9. And right now, this is Thursday, you're at 6.1. The weekly chart is saying, like Lee Corso would say, not so fast. Okay, so that's what's going on inside of Google out here. The question was also about the NQ, I believe. Am I correct? Was it the NQ that you also had mentioned? Yeah, it was also the NQ. Now, if we take a look at it, I don't have an A to B equals CD to the upside out here that has been confirmed. And the reason, because this is what I would be looking at. That pattern would use as our A point, September 12th, as our B point, the high on 1010, as our retracement, and our C point, that is the bottom of October 13th. We're not above 4901.50. In fact, if anything, that level has been rejected out here, and that is the TAS weekly profile. But, of course, what will be the influencing factor here is going to be certainly Google as well as Amazon, right? Amazon is going to go ahead and probably impact what's going on here. If we take a look at Amazon, and I go try to identify, are there any messages with regard to Amazon? The answer is going to be, well, first on the weekly basis, we have a confirmed A to B equals CD. What's it mean, confirmed versus unconfirmed? We just really take a look at the B point, and if that's passed, that's a swing point. It's an important swing point. If it gets passed with volume, which was 16.7 million shares, that was a week that began December 28th. Now, that's a problem, right? How can we just accept 16 million shares for a candle that begins right after Christmas? Got Christmas and New Year's. Is that volume that we can really measure and say, hey, for sure? Because when it was passed with volume of, I take that back. 18 million shares. So 18 was certainly passed with 17, but not necessarily with conviction. Nonetheless, hey, this little thing, is on the rise nonetheless. Volume or not, it's on the rise, folks, and it says 885.19. However, 2 trading sessions ago on the daily chart, it gave you one of Tom DeMark's sequential counts out here, TD sequential. That's when you get this little 12 count, little Stevie's blue numbering system out here, and that occurred on the trading day of October 25th. Now, the problem here, this is not a Tom DeMarkism, this is a Stevieism, because he, in his books and so forth, he's a little flexible with regard to what you would use as a signal for a reversal. For me, the signal is pretty clear. I'm going to use that oscillator on change line, and we're below it. Now, this chart here is not updated. For some reason, I have a little bit of a struggle. We're not trading at 822. We are trading at 820.17. Nonetheless, we are still below that price level. So the daily chart is kind of saying, may not respond the way that the chart pattern here suggests. Nonetheless, if we try to identify where is price going to head to either side, right? Let's look at both sides. You wouldn't want to get in on this trade if you're not already in it. And if you're in it from bottom, I'm not saying to exit. I'm not saying that at all. But with regard to where would price pull back to, we already took a look at the upside potential. Downside potential is probably 790. And below that, 761. But I would anticipate 790 should be the bottom, or should be a support level on a move lower inside of Amazon. So, Maria, I hope that helps you out with regard to what you were looking at. Other questions inside of the Den? We're calling this Den Thursday out here. I didn't see any other emails as well. Steve, if you have time, I always have time. If pharma, drugs, hospitals, sold out to me, that means Hillary will be our next POTUS. Can we use this leading indicator for SPY's diamonds to break lower in November 2017? Geez, that's an excellent question. I have no idea how to answer that because I don't know. You're really asking about correlations out there, and I don't know that. Now, the more interesting question is this. And that is, you're referring to polls, right? You're actually referring to polls out there. And the polls you're referring to are the ones that are taken where they basically call 885 people. Now, I know that each of you out there, you are intelligent, you are gifted, you are extraordinary, you are thoughtful, you're thought-provoking. You guys are special people. I know that. And have you been called and even asked once this year? I mean, if they aren't calling you, and you are, I would believe, a likely voter out there, do you really want to rely upon the other 845 people? Duffy, those calls, by the way, the ones that you're probably getting the same as I'm getting, they're just calling for our money. They're not really calling to find out what it is that who we're going to go ahead and vote for out there. But maybe you get them. Maybe you're getting an answer. Tell them who it is you're going to vote for. But hey, here's the thing. You're going to say, where the Sam heck were you going on that? The interesting thing with regard to the presidential election cycle, the real poll out here, if this market doesn't move through the October 13th lows out here, it actually says that Donald Trump is the winner. Just saying. Steve Rhodes with TFNN. This is the presidential cycle, folks, that we're looking at on my screen right now. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. The chart that we had on the screen just prior to the break, this chart here is taking a look at the Dow. The blue line on this chart here is the Dow for 2016. Then the notations, red, white, not blue, but green and yellow, identify the 4 cycle patterns that are in place. Not psycho, but cycle patterns that are in place that tend to identify turning points way better than anything else that I have seen out there. And they work. And now you have to combine this with other pattern recognition tools. It doesn't always happen to the day. So you're using this as a guideline. Then you're looking at the chart patterns to go ahead and give you the signal that the cycle has completed out here. Now, the yellow one, if you take a look at the yellow notations, those are what are associated with the last year of a second-term president. And these have worked pretty well. There was a bottom that formed on June 27th. Versus June 25th. That's close enough in my book. There was a top that formed on September 6th versus September 9th. September 9th had that big move to the downside out here. Close enough for me. October 21st was supposed to be the next bottom with regard to the pattern of the last year of a second-term president. But what also has been working pretty well has been the green notations out here. And the green notations are the ones where the office of the president moves from a Democrat to a Republican. Oh, I'm sorry, being retained by a Republican, being retained by a Democrat out there. You know what I mean. In this case here, found a nice bottom, February 11th versus January 15th. That was close enough. June 27th versus June 24th, close enough for me out here. But here's the problem where it's starting to fall apart. This pattern was supposed to form a top last week, right around October the 19th. Anytime last week, and it didn't do that, at least not just yet. In the case of the Trump Meister out here, his pattern was really dead on out here with regard to the Brexit bottom, June 27th versus June 24th, perfect, and that it was supposed to form a bottom last week between October 13th and the 21st, and it did. It did, and at this stage, now we haven't seen much movement. So how am I going to read this? If we are in a market that trades sideways for a couple weeks, I'm going to read this as the market doesn't have a clue either. That it too is uncertain. We really need to break away to the upside or the downside from these levels inside of the Dow specifically in order for this to have any real significant meaning to me. However, the cool thing is we can push this off to the side. Once we know the results, we know what the patterns are with regard to whether it's a Republican or Democrat candidate and what to look for and how to trade the rest of the market out there. So at this stage here, that's the update. Now, back to you, Mr. AG out here, who was asking really about the health care and whether that has any meaning on being able to identify who the next president will be. Here's what I would say with regard to the XLV. We are pushing on a string. This is getting set up for a buy, or it looks like that's what it is trying to do out here. It has been pushing lower, doing less relative energy. You got Tom DeMarc's ears perked up, that's for sure, because it did form a TD sequential count. The problem is price has not been able to get above Stevie's red line, that oscillator unchanged line. So no confirmation here just yet. But folks, if you're looking for a sector to play, this one is suggesting that the rotation out could be done. You probably ought to keep an eye on this. Pattern has not confirmed as we speak right now. Well, folks, it's been great to be with you. I will not be here tomorrow. My apologies for that. I have some other commitments that I have to address, but I will be back with you on Magnificent Monday. Nonetheless, Dow hasn't really moved much. We're up 13. S&P is flat. But our man, our polar bear, David White, he's going to get these markets to move for you. He's going to get them moving and grooving. So have a great Thursday, a great weekend, a great game day Saturday, and we'll see you on Magnificent, Marvelous, Magical Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.